Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. 2, 1. Well, welcome. It's been a while since we've had a recap, so I thought we'd do one for the end of the year. I have to tell you, sometimes I wonder what in the world I'm doing trying to beat the market. But here's what's happening so far. So we've had a couple of trades, 1, 2, 3, 4, 5, 6, 7, 8 trades since we last talked. We're going to review those kind of briefly and see kind of what's been going on. It's been a little bit of mixed. You can see this is a pretty choppy sideways kind of market. And we are going to we're going to recap where we are as of the 31st to get an accurate calendar year 2025 performance. So it's been very interesting. We've been, making some entries here and taking an exit, and that's fine. But then we're sort of out of the market for a little bit. We're buying very high here and selling for a loss. We're actually selling at the bottom of that red candle. So selling for a loss on those two. And then we literally stay out of the market for 1, 2, 3, 4, 5, 6, 7 days before we finally take an entry at the end of this day. And again, we're kind of making some interesting trades here. We're buying at prices that are higher and definitely taking a loss. So we're selling toward the close of this candle. It's not a very good trade. We're out of the market again for 1, 2, 3, 4, 5, 6 more days. We think there's sort of this looping. Maybe it's going to head back up, and it doesn't. It just has this horrendous fall. So those are some pretty tough trades to swallow. But we do pick up a pretty good entry at the end of this day, which was pretty good. But we only wrote it out for 1 day, and we missed a lot of this gain. And then we went back in, end of this day, picked up another day. So as you might remember, we are trading a leveraged fund. And I'm just going to do a little segue. I was out in Houston, Texas, in Memorial Park, taking a look at this golf course driving range that has 2 levels. And as I'm, working my way around the track, I'm thinking, so 2 levels, that's almost kind of like leverage. You get twice the number of golfers practicing their swing as you normally would with one level. And I thought that's kind of similar to what we're doing because we are trading leverage funds. So when we're, taking these losses, they're twice as big as the market, but these gains are also twice as big. But that's kind of where we were up to this point. We went in at the end of the day here thinking the market was going up. It looked pretty good. But then sort of this big collapse. And that's what I was seeing several times in this market where we're getting in, we're going to wait to ride something out, and there's a big collapse. Here's a big collapse. Here's a big collapse. That one, this one, they're all over the place. And then we, got out of the market here, bought back in, hoping there's going to be some bounce. There isn't. So we're closing out here at the end of the day and just sort of sitting tight. And again, we're out of the market for 1, 2, 3, 4 more days, right? We pick up here, and you can see this is this candle is January 5th. So this is the last candle of the day. So my performance metrics are going to be here. You can see we are in an open trade still. We are showing a profit, but we'll catch up on all that sort of next year. We're going to take our end of the year position and see how did we do all year long. So with that, let's head over to the tracking sheet and see how we're doing. Our last trade that we reviewed together was back on the 17th. You can see there's been several trades. We were in a pretty much sideways market with a slight uptick a little bit, but you can see that we were taking some pretty massive losses. I'm just going to go through pretty quickly here and summarize. We took a -1%, a -3% at the same time the market was going up. Market's going down and we took a loss. That was fine. Here's probably one of our finer trades where In this case, the market's dropping 0.5% or so, and we're picking up 2. Those are some pretty good trades. And then we're kind of going one for one with the market. But all in all, that's kind of where we ended up. And again, we're going to take a check-in here at the 31st. And let's take a look at what happened over the course of the year. So I think the big news is, or at least some news is, the market really came and rallied at the end of the year and returned about 18%. So if you would have bought and held the S&P 500, you'd have picked up about 18%. Fantastic year. We had our best results back in October. So November, December, a little shakier, took some losses, and that pulled it way back. But we ended up with 30.82%. So all in all, there's a nice chart of what that looks like up here. Not a bad year. I think it's interesting to take a look at our metrics and see what we did too. Some of the things that I watch is percent winning trades and the beat the market factor. So we look to see around 70%. That's historically what we do. This year, we only got 60%, sort of in the ballpark, but a little below what we usually do. Our beat the market factor means if we go up $1 in the S&P 500, market factor of 1 would say we go up $1 trading. So we try and target right around 1.5. So we want to do about 50% better than, like 1.5% better than what the market does. This year we hit the goal. It was really good to see that, 1.17. You can see some of the historical benchmarks. Most of the years are pretty good. We do get that benchmark. Back last year in 2024, we did not. I guess now about 2 years ago, we did not, but still okay. So we've been doing this together for about 5 years. And one of the important metrics that I think is, I always want to see annual return, but I also want to see something called compound annual growth rate, because this one's super important to me, at least in my thinking, that I can compare investment to investment, including some level of volatility with this, and see how we're doing. So over the course of about 5 years now, if you were to look at the compounding annual growth rate of the S&P 500, you'd be about 14.5%, 14.6%. One of the reasons that I keep playing this game is we're looking at something like a 21% difference. Over a period of time, 2, 3, 4%, over 10 years is life-changing. So this is a pretty significant return, 14 versus 21, almost 22 here. So pretty good. Another key metric that I think is also super important is, what's the drawdown look like? And what does the drawdown mean? So drawdown is from whatever peak happened to the lowest point. So it's not necessarily a day thing or a calendar thing. It's just looking at from peak to trough for this year, what was the maximum drawdown? And I think this is pretty interesting because even though we're trading doubles, the maximum drawdown on the S&P 500 was 12.6% roughly. Our trading is actually lower than that, not by a lot, but a little bit. It just means we've taken a little less drawdown than the S&P 500. I think that's very interesting. I think those are probably my 2 favorite metrics right here. So compounding annual growth rate and drawdown. Some other interesting ones that people look at are volatility in terms of standard deviations. And you can see here's something kind of interesting that, the market's 14, we're 22. So you'd say, well, we're more volatile. That's true. But you look, I'm just going to push this to upside and downside volatility. We're way more volatile on the upside than the downside. So we are a little more volatile on the downside volatility. That's just looking at only negative trades, how volatile those are annualized. And then on the upside, on the gains, what do those look like? So, this is a pretty big spread of about 10% here. S&P is around 6%, but most of that is on the upside. So I think that's really good. And one of the reasons I have volatility here is a lot of people like Sharpe ratios. This is the risk. This is your return minus the risk-free rate over the volatility. And you can see that buying and holdings 0.83, we're not that much different because we have a better return, but we also have pretty big volatility. So it's similar. And that's why some people like what's called the Sortino ratio, because that just looks at downside volatility. So, depending on what metrics you think are important, if you're looking at maximum return with the least amount of downside volatility, Sortino is pretty good at looking at that. But I would say, I really like just looking at these two, which is annual growth rate, drawdown. I have volatility in there too, just so you can get some of the other ratios. But I'd be interested in hearing what you think are the best metrics to, measure performance over a period of time, because those are the two that I like a lot. So that rate wraps up 2025. I think a pretty good year overall. We'll take the 30.8%. Over the market's 18. We did achieve most of our metrics except percent winning trades. And honestly, of all the things that's probably least important, I do want to be able to beat the market. I do want to be able to outperform it with returns. And I think we had a pretty successful 2025. So we will turn our attention to 2026 in our next video. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.